Welcome to the BizPlanBuilder Visionary Funding Financial Model. This is our mothership financial model to help you project all of your revenue, costs, profits, cost of goods, valuation, investor deal, all of that out to 5 years. We happen to have an optional 10-year version. If you go back to the website, look under products, you'll see BizPlanBuilder, and there's two options for the financial model. You can get a 10-year version as well. Anyway, the first year is projected by months, years 2 and 3 by quarters, and years 1 through 5 by the entire year. So you have some options as to the kind of reporting you want to give people. Some people want all of it. Some people have different variations that they want. We recommend hiding pages. Don't delete pages or lines or paragraphs or columns or anything throughout the system. Just hide them. It's easy enough to do. And so you can set this up and tune this financial model to whatever audience you want by simply hiding the months or hiding the quarters or hiding entire years, or just giving them a model showing entire years. Whatever you need, you can do that. So this really becomes part of what I call the ultimate brochure for investors and lenders, and really anyone who needs to understand your financial models, especially maybe a new hire in your finance for your company, or a consultant or someone like that. And our idea of intuitive and logical is helping them to see the numbers they're looking for. And at the same time, they can see how the numbers and the math added up. How'd you get here from there? That's important stuff. And so when you're on challenge, if you're talking to investors, you're going to need to answer the question. So you're going to see how, from building it up yourself, you're going to understand how this works. And you'll see as you step through it, it's really quite easy. It's a lot to it, but nevertheless, you'll be able to answer the questions because you need to, and we'll help you out along the way. So let's get started. This is all about what lenders and investors want to know about your business. So building a business requires more than just an idea and a plan. And for the moment, I recommend you refer to this moment often. Put yourself in the investor's shoes. What would you want to know about a business to inspire you to invest in it? We often recommend investing or imagine investing in a friend's business just to get the mental, physical, emotional, and spiritual experience of investing your precious cash in someone else's business. Now, more than ever, you must be convincing to the bone, and expect that intelligent people with money will feel comfortable with you and your answers and your ability to run your company. Become comfortable with your numbers and be able to explain them. We'll show you how as you go through the model. We offer 3 different ways to produce your financial model for your business plan. Built within the BizPlanBuilder application, you can see the submenu in the graphic on the right. There's a little financials, and you click that and you'll go straight to the online wizard-driven model. Now, for those of you who want something totally customizable using Excel, we've got 2 models there. The expansion model, this one is I'll call it a straightforward, fully customizable Excel-based workbook. And it's basically about 7 pages. It's designed really for bank loans to show the bankers that you can make the payments. It's not nearly as complicated as the visionary funding model below, which this whole video is all about using the visionary funding model, which really is the first one we started with, which enables an investor to see and understand how you arrived at your numbers for a product or service that perhaps has never existed in the world before. So you're showing how many customers there are, what the size of the market is, what percentage of that market you're gonna capture, so to speak, and how you're going to build a business on top of all that, and shows them what you're going to do with the money. So this tour addresses the visionary funding model, but I wanted to point out that the expansion plan model and the visionary funding model are in the financial model tile on the business plan panel, and you can open them up, look at them both, and choose the one you want to go with. Okay, let's get started filling in your financial model. Obviously, some of this top stuff makes sense. What's the projections updated on? You can change that from time to time to show, well, mostly for your own self, but to show anybody who's looking at it. And this will show throughout the model when this model was last updated. Obviously, put your company name in. This is how it's going to appear throughout the entire model. And beginning month, whatever month it is, typically it's most easily understood if you started in January, no matter what. You can see where you can insert certain numbers starting later on in the year, but do what you want here. Beginning years makes sense. The fiscal year end, we've set it up for December at the end of the year. The amounts you're entered in, we're recommending just put in the actual dollar amounts. You can put in thousands. You can put in, certainly don't put in pennies. The 0.00, we don't have that throughout any of it. You don't want to put it in there. It makes the numbers look big and hard to read, and just overall not a good idea. And also put in the number of current share value, shares of stock that you've issued. I've got another discussion somewhere else saying, hey, 10 million is a good number because it looks, you can be generous with your employees, although they haven't given up much to your company, but put that number in here. And you'll see later on in the valuation and the investor deal what the share values are worth and all that. So this is used in that calculation. Now, the intro offer, I'll just talk about more on the demand model, but the intro offer is something where you've got some low-cost product to establish somebody as a customer. So what is that loss leader perhaps that you're offering right up front? And then you've got categories for altogether 10 products. And so put in your product names here. You may, as you go through the model, you understand how this will apply, but you'll see these names of your products or services or profit centers, if you want to call them that, throughout the model. This just saves you typing. They'll be already in the pages and begins the customization process. The next 4 or 5 columns there that you'll see are some of our ideas of what they might be depending on the industry you're in, just to give you a head start. And so as you'll see, this is based on Excel, so the whole thing is fully customizable to give you a model that's exactly what you want for your business. If you're building a business plan for a business that's not a startup and you have some history, we accommodated about 3 years. That seems to be enough to show a run rate of what you're doing. And this will show up throughout the model to give some of the more conservative investors, typically they expect to see a hockey stick where you're going along, they give you $1 million or $10 million or $100 million, whatever the number is, and then your business just skyrockets. Well, okay, that's nice. But let's just see all the places where you've spent money in the past on marketing, what your sales have been by product, all this different stuff can go in here. And then in the rest of the model, they can say, okay, what have you done in the last 3 years? And if you're doing something, all of a sudden you're spending 10 times the amount of money on marketing, for example, than you did last year. Well, simply because you got the investment, which is great. At least you're seeing where that radical change is. If you need to put in an explanation or think about an explanation, certainly anticipate the question. You can say, well, the reason this number jumps here is because we're doing X. And so that's really enables you to show if there's a radical departure from your past and what you're doing with the investor's money. You can explain it. You can see where it shows up. They'll certainly catch it. And you want to be ahead of them with an answer. On the revenue demand model, what we're looking for here is to show a logical buildup of how you arrive at your revenue numbers. I've been at a number of conferences where people say, oh, we're going to do $1 million in the first year, but they have absolutely no way of substantiating that. So where we start is at the top, and you have 10 different lines where you can insert different kinds of customer segments. And that way, these are all empirical fact. They can be researched and due diligence by investors. You can look up and get actual numbers of how many people own, a sailboat or a powerboat or a fishing boat. You can get those numbers. Okay, the next table is what percentage of that market do you think you're going to be able to sell to? This would probably be the one place where investors may challenge you, but these are a few numbers you can change them. So you've got 10 different categories. They're probably not going to challenge you in all of them, and they may not challenge you that much. But you manipulate these numbers to then show from a reasonable percentage of those marketplaces to what number of customers you're actually going to have from that. That's the third table down. So that just does the math between the first two. Okay, so then you're going to show there's one little number there that shows how many existing customers you're starting with, if you have any. And this table is starting to show how many customers you already have, how many customers you're going to add each year, and what your overall customer base looks like. The next thing is the premise. We've got an intro offer here, and this is based on the idea that it costs 5 times as much to get a new customer as it costs to get, to sell something to an established customer. Put another way, it costs 20% to sell your next product to an established customer than it would cost to sell to a new customer for them to buy your first thing. So we're suggesting some kind of intro offer, some kind of no-brainer thing, low price product that you can sell them. It's got to be something they actually buy. That way they're actually a real live, honest-to-God customer. Okay, so then you've got some additional products you sell. So the idea here is, well, how could you build your product line if this model suits that? How you build your product line from, okay, the customer buys one thing, and then with the same customer base above starts buying the next things you have. And pretty soon they're buying your whole product line. And so the table down that it talks about the percentage, the feasibility of this, talks about the percentage of how many of these above customers of your entire customer base are going to buy your follow-on products. And that does the math to tell me how many units you're selling. And since you've got the price put in for each unit, the last box down there, the last one in that middle big box, shows what the revenue is based on all the units you're selling. And then there's the other, which could be, anything other that you sell that's kind of maybe a one-off deal, or, like in the cable TV pricing, there's, regular channels, premium channels, and pay-per-view. This might be the pay-per-view part. And the rest does the math. The green box is if you said, okay, let's run with these revenue numbers. And if I just put in a number like, okay, let's make R&D 15%, marketing's 40%, which is astronomical, G&A, general and administrative, is 10%. What do these numbers look like? This is a quick, rough, dirty, just feasibility analysis to see how this business looks. The rest of the model, of course, sharpens the pencil on this table. This table doesn't print anywhere else, go anywhere else. It's just here to kind of verify what you're saying on this model. So the rest of it will sharpen your pencil. Keep going. Most of this financial model is driven by percentages of revenue, because many times in companies you'll say we're going to invest a certain percentage of our revenue in R&D, certain percentage in different things. And so it helps you put in those percentages, so it calculates them, and you can drive your numbers from those percentages. Also, if you're to shift or change your forecast for your revenue, it automatically resizes your entire budget for most everything. Everything except people. People are either there or they're not. So you can't really drive your head count by your revenue percentages. So here we have a page that helps you plan for exactly which people, how many people in each position you have. It may look a little daunting at first, but once you get it, it'll make complete sense, I think. The top left assumption boxes are pretty straightforward. We're trying to get a sense of also planning and anticipating your office or warehouse or whatever rental needs, if your lease needs, depending on how many people you have, because nothing like having a small office, hiring a bunch of people, and suddenly needing a bigger one without thinking about it ahead of time. This enables that to be very easy. But let me explain these two rows for each of these things. This takes a little explanation for it. First, you'll see in the white background versus the green background. The white background are current people paid for by current company cash flow. The money you have that you're making, you're already paying for your own people. The green shaded area is the part where you're saying, hey, investor, if I had an extra $1 million, $10 million, or whatever you get, if I had this money, I would hire these people. And so let's say in this example here, the owner-founder would be getting paid out of investor money in that green row. You'd have the numbers in either the green area or the white. Now, what I mean by that is this. So you say you want to hire a CFO or somebody in here, and the investor's going to pay for them. The investment money is going to go to pay this person's salary. So for, say, call it 9 months. So you would have in the green area, you'd have a 1 for the CFO stretching out for 9 months. Month 10, you don't put any more ones in the green area, but you put the 1 up in the CFO area up above. You can see the titles are the same, the salaries are the same, everything's duplicated between the green and white. So if you do add a row in here, you're going to want to add them in both areas, and of course make sure the total in the light gray area includes them in the formula. But suffice it to say, the idea is the green area is showing you the people you're going to hire with investment money, and then when the company, the pump is primed and the company is be able to pay for them, then they're going to jump up to the white area, and now they're paid for by the company. What'll happen here, this page then goes to the next one where it does the math, and it'll tell you this is how much money we're going to need to hire these people. Here's how much money we're spending on the people we have, and how that's going to change over time. And what this allows you to do, because it goes out a full 5 years, it enables you to project the number of people you have. If you need to make any changes in headcount along the way, you simply type in different numbers in those areas. But you're going to have maybe you have one customer service person to start with. In 6 months, you have 2. In a year, you have 5. Okay, there's no need to have a separate line item for customer service person. You simply put in the number of people in that job, and that does the math for you, so it keeps it kind of simple. So if you needed to reduce from 5 to 3, you just project forward from that by changing the 5 to a 3 and thereon. So hopefully this makes sense. You'll see it more when the instructions on this. You'll see the page, and it encompasses the entire company with lots of options in here. And also the matching HR plan page, which comes right after this, and the tabs at the bottom will show you what happens with the math, like what the monthly cost of each position is, what the total is going to be, what the benefits are going to cost, and also you'll see here how much floor space or how much office space you need to rent. Okay, here's a fun page. This is where you get to list your entire kind of shopping list, if you will, of everything you need money for, whether it's an accountant, brochures, advertising, marketing, trade shows, product development, inventory. It's an opportunity to list everything. Now, the cool thing about this that you need to understand is that you don't need all the money at once. You don't need all the money to do everything in January. Some of these things can be spread out over several months. They can be started later in the year. So basically what this is going to look like is you're going to put in the amount of money you need in the month, under the month that you need it, and it will total up at the end of the year, so you'll see the total amount. And then at the bottom of this page, you'll have a listing that'll list everything you need to have. And then it'll roll up into the following page, which is going to be the one called use of proceeds. And this is the summary that investors often look for and say, well, what are you going to do with the money? And the list of proceeds will show them. If they want to see the detail of how you got there from here, you come back to this page. If some investors will say, like, let's say you say, I need $1 million. They say, well, what can you do with, 150,000? Well, you'd come back to this page here and adjust the budget for what you could do with 150,000. So either way, you're listing what you need the money for to get started, build the business, what you're going to do with the investment capital, and this will play into the rest of the model to show at the end basically what the revenue looks like, all your costs look like, profits, everything, business valuation, and the investor deal. So have some fun with this, put everything together that you think you need to build the business. This is where it goes. Generally speaking, throughout this entire model, the blue numbers are the ones you edit and change. The black calculations are all, you don't edit those at all. However, in some cases, you may want to just simply hide the table and type in your own numbers in some of these places. So think about that. But generally, we try to drive it off the variables. That way, your model will always float with the revenue, and that way your expenses will float with the revenue changes. The system automatically generates all of your expected financial statements from cash flow, income, budget, balance sheet, all of that. And we do it in 3 different ways, all by months, years 2 and 3 by quarters, years 1 through 5 the entire year by entire year. Here's where your investors and their analysts pull out their calculators and do some analysis on your business. We've done it for you here. We explain what all these ratios mean, what the formulas are, what they tell you, if you change them, what to do to improve them. And it's all pretty self-explanatory on the actual page, but this is the one you're looking for, is ratios. And we've got more ratios, I think, than any other business plan out there. Sensitivity analysis is also known as your best worst case scenario. What we've done here to make this simple, rather than having you create 3 entire sets of financial models that someone's got to go through and figure out, we did it all on one page. So we took your planned numbers, all of the income numbers, and put them down that middle gray column. And on the left side, we said, okay, on a bad day, pessimistically, we're going to do 70% of sales. And a good day with a tailwind, we're going to have 120% of those sales. And that applies to all sales. And the same thing with all expenses and all your other costs. And at the end of the day, it'll produce. And you can also at the bottom put in, okay, what percentage likely is my pessimistic case? It's 50% pessimistic, 30% planned, 20% optimistic, and that calculates a weighted average of what the revenue might be, and that calculation is used in figuring out a valuation and a return on investment. This is where all of your hard work comes together. Let me give you an example of what's going on here. So we're going to figure out the valuation of the business so the investors can invest in it. So let's say you make a case where your business is worth $9 million. That's called pre-money, before the investors put money in. And then let's say investors put in $1 million. So the $9 million pre-money plus the $1 million investment makes a $10 million post-money. Okay, that's the way the terminology goes. And if the investors get 10% of post-money because they put in $1 million of that 10, they now get 10% of the stock. Now here's where it gets interesting. The idea is, if you can, well, we always say the better job you do on your business plan, the better deal you'll make. So the better story you tell, the better the number, you can project the numbers and explain the numbers. Let's say you can convince these guys that your business is worth $19 million pre-money. They put in $1 million. They only get 5% of your business, so you give up a heck of a lot less. So this is where all of this culminates. This is the holy grail, is getting to the valuation, because the valuation feeds right into how much of your business you have to sell the investors to get the money. This page takes the previous valuation give up page to the next level to really understand your investors, the deal for the investors from various different angles and from various different scenarios. So you'll see here it's a little bit complicated. You might need to have someone who's a financial analyst friend of yours look at this to give you some ideas. But part of the main thing we want to really get across here for you is to see what's your part of the business worth. So you can build this business, and the idea is, would you rather have 100% of a $5 million business or 10% of a $100 million business? So the idea is that if the pie gets bigger, your slice gets bigger. This page helps you calculate what's your slice worth. Is it worth all the trouble and the effort it is to bring investors in and have them invest in your business? It's got to be good for you. It's got to be good for them. Here's where you figure that out. Cap table is short for capitalization table. This is going to show through many series of investment. We went through Series E all the way to an IPO, if that's what you're going to do, to show exactly or calculate exactly how many shares you keep, your management team keeps, go into your employee pool of stock options, and then what do the investors get? How many shares do they actually get? You can show what the share increase in value is. So now you get a sense of the actual mechanics of how many shares everybody gets out of this. I hope you found this tutorial interesting and useful and helpful to put together your financial model and really understand the numbers of your business. It's doable. I'm a right brain artist type myself and help put these together so I could figure them out. So I hope this helped you. If you like BizPlanBuilder, please tell your friends, associates, clients, and others, even the consultants you work with. I appreciate it. Join our affiliate referral partner program and we'll pay you a percentage of your referral sales. Thank you very much. If you have any questions, please click the tech support button or give us a call, and you'll see the number at the top of the web page, and we'll take care of you.